From stocking shelves to stock dominance, unveiling the quirky path to 5 figures monthly. Here's 5 tips to the enigmatic pursuit of the stock market picture. This, my friend, you're sipping your morning coffee in a robe embroidered with dollar signs as you masterfully manipulate the stock market, effortlessly raking in 5 figures per month. It's the kind of aspiration that merges Wall Street dreams with the entertainment of a sitcom and the intellectual prowess of a chess grandmaster. Join me on this roller coaster ride through the zany, entertaining, and surprisingly brainy journey of transforming into a stock market dominator. Tip 5. The delusion of grandeur. Before diving into the intricacies, let's address the fantasy, that mental image of you lounging amidst stacks of cash, stock charts in hand, as if your life is a financial blockbuster. But wait, let's pump the brakes on that cinematic reverie. Becoming a stock market maven isn't an overnight ticket to Easy Street. It's more like an elaborate dance where your partner is Mr. Market, sometimes waltzing gracefully, other times doing the cha-cha with your emotions. Tip 4. Quirky tidbits from the trading floor. The trading floor, the hallowed ground where fortunes are won and lost, and where more quirks reside than in a Wes Anderson film. You've got traders talking to their plants for good luck, others employing lucky underwear, and then there's the guy who swears by eating only orange M&Ms on trading days. So remember, if you're not feeling confident, just grab a rabbit's foot and let the quirkiness commence. Tip 3. The kaleidoscope of stocks. Stocks, those enigmatic creatures that sway like a pendulum. Imagine them as the colorful candies in a jar, each unique, each with a story to tell. But don't be fooled by their allure. They're just as likely to mimic your favorite roller coaster. One minute you're on the highest peak, the next you're plummeting. That's where diversification becomes your superhero sidekick, helping you avoid becoming a one-trick pony and ensuring that the sweet taste of success is a consistent flavor. Tip 2. The quantum physics of market research. Now let's delve into the intellectual jazz of market research. Think of yourself as a quantum physicist, seeking hidden particles of information that others might miss. From analyzing historical data to predicting future trends, it's like you're in a time machine navigating the complexities of market evolution. It's a fusion of detective work and crystal ball gazing, where the only constant is that nothing stays constant. Tip 1. The art of Zen and the art of trading. In the pursuit of 5-figure domination, emotions are your most fickle friends. One minute you're a Zen master of equanimity, and the next you're a furious bull charging at shadows. Welcome to the roller coaster of emotions that is trading, where the psychological challenge is as real as the financial one. Learning to keep your cool, whether you're floating on cloud 9 or plummeting down the rabbit hole, is an art you must master. For those who are still watching, here's a sweet bonus tip. The real heroes, risk and patience. Behind every successful stock dominator lies the unsung heroes, risk and patience. They're the Batman and Superman of the stock market universe. While risk is your daring sidekick, pushing you to take calculated chances, patience is your steady mentor, teaching you the art of waiting for the right moment. It's a quirky duo that keeps your journey from being a mad sprint to an exhilarating marathon. Please consider subscribing if you are getting value from this video, and comment new subscriber or any questions you have, and I will do my best to respond to most engagement around the time of this video release. Conclusion: the laughter, the lessons, and the 5 figures. In the end, can you truly dominate the stock market and consistently make 5 figures per month? Well, that's where the comedy, the intellect, and the unpredictability converge. It's a blend of odd rituals, surprising insights, emotional roller coasters, and calculated risks. It's a journey that offers both laughter and lessons, an intricate dance that sometimes stumbles and sometimes twirls gracefully. While your path might not always lead to a robe adorned with dollar signs, it will undoubtedly lead to an enriched understanding of finance, a mastery of your emotions, and a quirky adventure you'll treasure, whether it's 5 figures or simply the joy of the ride. Here are 5 simple strategies to get you started in the stock market as a beginner. Since you're wet behind the ears, young blood. 1. Educate yourself. Start by learning the basics of how the stock market works, key terms, and different types of investments. There are plenty of beginner-friendly resources online, such as articles, videos, and courses that can help you build a foundation of knowledge. 2. Set clear goals. Determine your financial goals and risk tolerance. Are you investing for long-term growth, short-term gains, or a mix of both? Understanding your goals will help you make informed decisions and choose appropriate investments. 3. Diversify your portfolio. Don't put all your money into a single stock. Diversification involves spreading your investments across different types of assets, stocks, bonds, etc., and industries. This helps reduce risk because if one investment performs poorly, others might perform well and balance out your losses. 4. Start with index funds or ETFs. As a beginner, consider investing in index funds or exchange-traded funds, ETFs. These funds bundle together a variety of stocks or other assets, providing instant diversification. They often have lower fees compared to actively managed funds. 5. Practice patience and discipline. Stock market success takes time. Avoid the urge to make impulsive decisions based on short-term market fluctuations. Stick to your strategy, whether it's long-term investing or occasional trading, and avoid making emotional decisions. Remember, investing always carries some level of risk, so it's important to invest only what you can afford to lose and to do your research before making any investment decisions. If you're uncertain, it might be a good idea to consult with a financial advisor before you start. Now pay attention to these 5 common mistakes to avoid as a beginner in the stock market. 1. Lack of research and education. Jumping into investing without understanding the basics and conducting proper research is a recipe for trouble. Avoid investing in something you don't understand. Take the time to educate yourself about the stock market, different investment types, and how they work. 2. Overlooking diversification. Failing to diversify your investments is risky. Putting all your money into one or a few stocks exposes you to significant losses if those stocks perform poorly. Diversification helps reduce risk by spreading your investments across different assets. 3. Emotional decision-making. Letting emotions drive your investment decisions can lead to poor outcomes. Avoid making impulsive choices based on fear or excitement caused by short-term market fluctuations. Stick to your strategy and long-term goals. 4. Chasing hot trends. Investing solely in trendy stocks or industries without a solid understanding of their fundamentals can be risky. Just because a stock is popular or has recently performed well doesn't guarantee it will continue to do so. Base your decisions on research, not hype. 5. Ignoring fees and costs. Transaction fees, management fees, and other costs associated with investing can eat into your returns over time. Be mindful of the fees associated with the investments you choose. Consider low-cost options like index funds and ETFs to keep costs down. Remember that investing is a journey that requires patience, discipline, and ongoing learning. It's okay to start small and gradually build your knowledge and portfolio over time. I will conclude this video on mastering the stock market as a beginner for $50,000 a week, the elusive pursuit. In the realm of financial dreams and whims, few aspirations stand as tall as the quest to make $50,000 a week from the stock market. It's the kind of ambition that combines the thrill of a roller coaster with the allure of a Las Vegas poker table, all set against the backdrop of ticking numbers and the bewildering complexities of financial markets. The glamour and the gobbledygook. First things first, let's address the elephant in the trading room, the allure of that elusive 5-0 payday. It's like imagining yourself rolling in dough on a mattress made of crisp $100 bills, right? Well, not so fast. Before you get there, you've got to grapple with the financial jargon that's thrown around like confetti at a Wall Street party. From bull markets to bear markets, dividends to derivatives, you'll need to understand that talking the talk is just as essential as walking the walk. The dance of the ticker tape. Next, let's tap into the entertaining side of the stock market dance, the tickers. Those little streams of letters racing across screens are like a high-stakes ballet, and you, my friend, are the choreographer. But don't let the pressure get to you. Think of it as a whimsical dance-off between company acronyms. AAPL does the tango with TSLA, while Google adds a touch of salsa. It's a symphony of letters, and you're the conductor guiding your portfolio to a harmonious crescendo. Roller coasters and heart monitors. Ah, the roller coaster analogy, a timeless classic, as I mentioned earlier. Just as you wouldn't hop on a roller coaster without your safety bar, you shouldn't dive into the stock market without a safety net. Volatility is the heartbeat of this financial fairground. The ups and downs, the whooshing of adrenaline, and the occasional scream, it's all part of the package. But don't forget the heart monitor diversification. Like a balanced diet for your investments, diversification ensures you're not putting all your financial eggs in one basket, saving you from the financial equivalent of a stomach drop. The X-ray vision of research. Now, let's tap into the intellectual realm research. Think of yourself as a detective, sifting through news, financial statements, and market trends with the precision of Sherlock Holmes. But instead of a magnifying glass, you're armed with internet searches and analytical tools. You're hunting for clues that might indicate a company's potential for growth or its imminent decline. Consider it a thrilling scavenger hunt for information, with a pot of gold at the end. The humble pie of learning. The stock market is a wise old sage that humbles even the most confident. Sometimes your predictions will make you feel like a financial Nostradamus, and other times you'll wonder if you've accidentally placed your bets on the wrong horse, or, in this case, stock. But fear not, for this is where the intellectual beauty lies. Each win will spark your intellectual confidence, and each loss will push you to learn more, adapt, and refine your strategies. It's a cycle of growth, and hey, the road to a weekly $50,000 is paved with both stepping stones and stumbles. This conclusion is about the journey beyond the dollars. So can you truly make $50,000 a week from the stock market? The answer lies in a blend of calculated risks, financial savvy, and a hearty appetite for the intellectual feast that the stock market offers. It's a quest that's as much about mastering the numbers as it is about understanding the psychology of markets and the art of resilience. And if you find yourself savoring the dance of the tickers, the thrill of the ride, and the depths of research, then perhaps the quest itself becomes the treasure, whether it's $50,000 or just another tick on the roller coaster of financial exploration. Since you made it to the end of the video, you're a sexy, smart, and money-motivated individual that needs to consider subscribing because it's obvious you are attracted to the content here. Trust I have more where this came from. Hit that bell notification so you won't miss what heat I decide to drop next on that ass.